There are actually 7 signs that your credit is above average. Credit is so important for getting approved for your dream home at a decent interest rate, or for funding your first business, which will help you escape the rat race of a 9-to-5 job. But I found out some startling information about the average person when it comes to credit. Like they have 4 figures worth of debt weighing them down, a total credit limit so small that many of you would just laugh at them, and the fact that you need a FICO score above 716 to be considered above average. That was definitely higher than I expected. You know, I gotta say a 716 is really ideal for most situations and most goals that you're gonna have when it comes to using your credit throughout your whole life. To get approved for most mortgages with like a FHA loan, for example, you'll need above a 620 or 640 credit score. So you meet that requirement with that 716. And also with that score, you'll be above the minimum threshold to get a Chase card, which is the most stringent of them all really, at a 700 score. So as long as you have north of a 700 score, and if you're average, you'll have a 716, you'll be able to get approved for just about any Chase card. When it comes to business funding or business credit stacking, they always tell you that you want to have at least a 680 FICO score. And in this instance, you have a 716, so you're well above that. And so you're going to be able to get a lot of funding on the business side with just an average FICO score. Now, to be considered of having an excellent FICO score, you'll need to have an 800 and above. That's going to be above average. And 716 is not going to cut it in that instance. I've personally been hovering around the 800 to 805 to 810 credit score. And so I've narrowly gotten into the 800 club and into that group of people with excellent credit scores. I think what you really should shoot for is having above a 740 score. That's going to put you squarely into the above average in FICO scores, but it's also going to allow you to have the best interest rates and have the best approval odds of getting approved for mortgages, credit cards, business loans. Because here's the thing, if you don't have that 740 and up, then you're not going to get the best and most favorable terms and the best interest rate on your mortgage, which can cost you tens of thousands of dollars, and that can add up easily to be even 6 figures when it's all said and done. Next, you're going to be surprised how few people actually don't carry a balance. I know a lot of you don't carry a balance, but most people are actually carrying a balance from month to month, and it's pretty sizable. So the average credit card holder has a balance of $5,900 that they're carrying from month to month. And with a balance that large, they're paying on average $97, so almost $100 per month in interest payments. So from all the figures that I gathered, it's either between 45 to 50 to 55% of credit card holders are carrying a balance from month to month. And those people are technically considered revolvers. And so a lot of you guys that are credit card enthusiasts are mostly transactors. That means that you're just using a credit card as a debit card just to make the transaction and immediately paying those balances off so you don't pay any interest. Now, FICO score high achievers carry a balance of $2,500 or less. That's about half of what an average person is going to be carrying from month to month. But it's still notable that even the high achievers are paying interest on their credit cards and carrying a balance. Everything that we don't do here. So my reported balance is between the $3,000 to $4,000 mark, which is still above average, but you got to understand that I have an available credit limit of about $200,000. So it's still a very small percentage. I hover between 1 to 3% of credit utilization rate on every month. So ideally, you want that balance to be lower instead of higher, because guess what? That's going to improve your debt to income ratio. So if you're trying to get approved for that mortgage for your dream home, you want that balance to be on the lower side most often. And so the more that you can lower your debt load on a monthly basis, and you go into a lender to get approved for a mortgage, that means you're going to be able to get approved for more home to buy, and you'll be qualified to repay a larger amount in a mortgage payment per month. Another great way to lower your debt to income ratio is lowering any balances that you're going to be accruing on your credit cards by lowering your expenses. Now, for a lot of you, a huge expense could be your cell phone bill. The Bureau of Labor and Statistics says that the average cell phone bill is $115 per month. That's insane. Why does it need to be that high? That's why I want to tell you about Mint Mobile, who I'm partnering with for this video today. Mint Mobile offers wireless service for as little as $15 per month. And the best part is you don't have to give up any coverage, any data, or any of your speed. They even work on the nation's largest 5G network. They keep costs low by selling directly to you online. cutting away the need for useless retail stores. Why pay more than you have to for the same network access? To get the best value in wireless, just click the link in the description or scan the QR code. All Mint Mobile plans come with unlimited talk and text, plus 5G and mobile hotspot. I switched to Mint over 2 years ago just to see if the savings were worth it, and the coverage has been strong ever since I lived up in New York, up until the time now where I moved down to the Carolinas. Now, I'm a little ashamed to admit that I watch hours and hours of YouTube, and I haven't noticed a difference in speed or quality since I made the switch to Mint. And switching to Mint was super easy. With their digital eSIMs, you can activate your phone right from your home. It only takes about 15 minutes to switch. Now, as a limited time offer, you can get their unlimited plan, which is only about $30 per month, now for $15 per month. That's a 50% savings on their already super low price. Use my link trymintmobile.com/CalBarton to get started. Next, there's an aspect of being an average credit card holder which can actually really hurt your credit score, and that's credit utilization rates. The average utilization is 31%. Now, most of the online publications are going to tell you online to keep your utilization below 30%, but that's just flat out wrong. You really need to go way lower than that, into the single digits. Credit utilization is really the easiest way to swing your FICO score up or down in the short term. I personally maintain a 1 to 3% utilization rate, and that's allowed me to get into the 800 club, and a FICO score high achiever has a 7% utilization on average. If you don't report and maintain a lower credit utilization rate in the single digits, you're really leaving a lot of points on the table. So if you're trying to go for that mortgage loan, or you're trying to get a better interest rate on that car loan, then you'll want to always stay in the single digits on utilization to save yourself some money. Next, did you know having many different cards gives you a hidden benefit that allows you to always have access to credit? Unfortunately, the average credit card holder has only 3.8 credit cards on average. Having 3 credit cards can create a pretty good setup for earning rewards. It's not going to be the best, but it'll be pretty decent. But what I found that most people on the street are not even going to know what those cards are called, and they're definitely not going to know what rewards they earn. And contrary to a lot of popular belief, there's no limit on how many credit cards you should actually have. You can really have unlimited credit cards and you're still going to be able to maintain a higher FICO score. In fact, most of the times it will improve your FICO score. I'm a testament to that because I have over 20 active credit card lines. And high achievers have 6 bank issued credit cards. So bank issued, definitely want to bold in that because you don't want store cards. They don't look at those favorably when it comes to getting you approved for loans and credit cards. They want to see bank issued credit cards from large banks like Bank of America, Wells Fargo, Chase, and so on. Now, the good part about having multiple credit cards and many cards is that it's going to automatically lower your utilization rate because every time you sign up for a new card and get approved, it's going to raise your available credit limit. And so if you don't automatically start using more of your limit and you just stay the same, it's going to lower your utilization rate, improving your FICO score instantly. And you're going to form more relationships with different credit card issuers and giving you that protection of not getting shut down or debanked by any one institution. And I like to call that credit card diversification because you're not putting one egg in a basket. You're putting many eggs in many different baskets. Now, you might find it funny how low many people's total available credit limit is, and that's $30,000. I'm sure either you or somebody you know has a credit limit of $30,000 just on one card. I know the Venture X card goes up to $30K as a starting limit. And just like having more credit cards is going to help you raise your available credit limit, if you have a higher credit limit overall, it's going to help lower your utilization rate. I personally have a total credit limit on the personal side, just on the personal side, of north of $200,000, and that's across about 20 different cards. When you're able to amass a larger available credit limit, it allows you to rack up higher balances but still maintain a lower utilization rate. So if you want to be above average, you'll need to be over that $30,000 limit across all of your cards. Next, the average person actually makes only 18 credit card transactions per month. Those credit card issuers make money through interchange fees that they charge each merchant that you transact with. They charge them between 1% and 3%. So the more you actually use the card and transact with it, the more they're going to want to increase your credit limit. And an easy way to drive up those transactions is by using your credit card as your default payment method for subscription services or for utility bills. And you can put that as your default payment method. And so those transactions just happen in the background, and that'll help you get well above that 18 transaction average. And I was surprised to learn that most people only use their credit card for about 27% of their transactions. That's pretty low from my estimation. Between my wife and I, we definitely transact at least 40 times per month with our credit cards. And it's really one of the easiest ways to build a strong relationship with your institution that you're working with. And before I forget, hit the link below and download my free credit limit increase cheat sheet. It's going to show you 12 different strategies that's going to help you increase those limits, especially on cars that you might be stuck on for the last few years. Now, I've come to learn how high credit card interest rates actually can go, and I think it's criminal. But right now, the average credit card user has a almost 25% interest rate on their cards. But here's a pro tip. If you want to maintain a lower interest rate on your card, go with a credit union, because by law, they can't go over 18% APR. But if you're working with a regional bank or a commercial bank like Chase or Bank of America, then those rates can go above 30%. I recently took a look at the sign-up page for the Quicksilver card with Capital One, and those rates are already at like 30.5%. So really, an interest rate shouldn't matter if you're not carrying a debt from month to month. But like we said earlier, half of people are actually already doing that. Even high achievers are carrying debt. So we have to take this into account. But it's always nice to have a lower interest rate card, because if you have to carry some debt in a pinch, you don't want it to be that expensive to carry if you need to do that for a month or so. And if you want to qualify for cars at their lowest possible interest rate, so in the rare event that you do need to actually carry a balance, then you need to check out this video next, where I show you the 5 ways to become what the FICO scoring company calls a high achiever, so you can get a lower interest rate on your future home loan. Thank you for watching.